Zenith Energy, which produces oil at its flagship asset in Azerbaijan, has today listed on the main market here in London, raising over £2 million via a private placing, having already established itself in Canada on the venture exchange. Andrea Cattaneo is the chief executive of the company, and he joins us now. Welcome.
Thank you.
Big day, of course, for Zenith Energy, and I know you've been at the London Stock Exchange this morning. Why the dual listing?
Well, first of all, we are listed in Canada. That is the history of the company for the last 10 years. And we have been moderately satisfied with the Canadian exchange because of the lack of liquidity. So we were an industrial company with a quote. And hence, this represented the opportunity now for the investors in the new market that is very liquid. This morning, till now, we have done 2.6 million shares traded, which is something that we did previously in 1 year or more. So that is so fantastic, and this gives us satisfaction for the long waiting of making the application and all the cost and the time implied. And so this is a wonderful exchange. And the fact that our price has been very much reduced because of the demise of the TSXV permit now to the new investors to have a great opportunity, because we are possibly 5-6 times undervalued.
Yes, I think you started at 7 pence today, and I think Align Research has got something like about parts of the business valued something like 42 pence, I believe. Just talk to us about the flagship asset, first of all, in Azerbaijan. I know you also have assets in Italy and Argentina. We'll talk about those in just a moment, but I know the flagship, the producing asset, is in Azerbaijan. Give us some more details about what it is.
Yes. So Azerbaijan is a country where mechanical production of oil started in 1847, even before Rockefeller, and in Pennsylvania, so has been the earliest place of development of oil. In 1900, 50% of the oil of all the rest of the world was produced only in Azerbaijan. So it's an incredible motherland of oil industry. Today, still the 12 largest reserve holders of oil and gas in the world, and we have 1% of the surface of Azerbaijan territory, so onshore. So we have the biggest field onshore Azerbaijan. So this is a field that has produced in certain periods 15,000 barrels per day before having mechanical, and not depletion, mechanical accident in Soviet time. After that, the Soviet Union collapsed. Azerbaijan has gained independence in 91. Mrs. Thatcher visited Azerbaijan in 92 with BP, and the focus has been since that moment, that visit, historical visit, in the Caspian Sea. So the onshore has been sort of forgotten, abandoned. Now that last year the oil price were collapsing, then the attention has been in the onshore. Anyhow, we do only onshore ourselves. We are a very small company, as you know, and so we don't afford to make 10,000 meter offshore drilling. And we have the opportunity to get this field very conveniently with the low initial cost. And so now we have a great potential, because we have very large reserves, and we have already at the moment 65 working wells in poor condition. And so our activity will be not to drill for the first 2 years, but to work over.
Right, work over from your existing production, which I believe is 300 barrels per day, and your target is for 1,000 barrels a day,
yes.
And this is just purely by working over wells?
By workover. So if you can make a calculation, 300 divided 65 is very few barrels indeed per well, and then instead this well have produced 300, 400, 500 barrels each. Is a question to recondition them technically, so it's a low cost and low risk operation. We have our own rig, which is something that distinguishes us from our colleagues. Normally people use oil service company to make works. We are against this idea, and we use always machinery that is of our ownership when we can. When we need to rent something, we do it, but this will be the exception rather than the rule. And so investors can see that there is an ownership of know-how of the equipment, the operatorship, which we have expressed as a track record in Argentina and in Italy, in oil and gas. And so then it should be nothing safe in oil and gas, but could be plain sailing.
Right, okay. What then for Azerbaijan? I mean, you've got £2 million now extra on the balance sheet. What are you going to use that for? Well,
you know, the money is supposed, except for paying for a small amount a creditor that has been long-standing, a loan, amicable loan from China. All the rest will be focused in Azerbaijan.
And you'll be, what, trying to exploit the other wells that don't yet produce?
Exactly. Or they produce very poorly due to mechanical fault. And so our plan will be every 20 days we will communicate to the market that we will have the result of a workover operation, so there will be a good news flow.
But then what happens when you get to your extra 1,000 barrels a day? Are you going to continue to increase the production?
Well, at that time, with 1,000 barrels per day, we have so much cash coming in the company, because we should remember that our production cost at that time will be $10 per barrel, so nearly the cost of Saudi Arabia, very low. Then at that moment we will start purchasing our own drilling equipment, not workover equipment, drilling equipment, and we'll start to make every 3 months a new well, newly drilled. So this of course will have a better potential, but will have a better, bigger risk. We don't want to afford this risk now because we are still baby, but when we have a little bit graduated, we can do that.
And what about shareholder returns? How do you reward shareholders?
Well, we are at the moment thinking various forms. For example, one of the ideas that can come to our mind as a board is to establish a dividend. And but first, you know, we have to make steady the cash flow that is already there, because in the last 5 months since we operate, we've already done a variety of delivery of oil which are paid in 42 days. So we have not only the production, but we have the infrastructure and the way to sell and being paid, most important, being paid. We are paid in dollar, we pay labor forces and suppliers in manat, the local currency of Azerbaijan, which has lost 1% per week in the last 4 months. So we have a devaluing cost and increase in revenues.
Just one final question on the oil that's been produced in Azerbaijan. What sort of quality of oil is it? Is it easily refined?
Yes, it's the most liquid ticket of oil in the world. It's called Ural. You can look it in your computer. Urals is the most frequently traded oil in the world. Is the same label of the oil coming from Kazakhstan, from Russia. Is a blend of various oils produced in the region, and so we are one of the components of the cocktail.
Okay, just talk to us a little bit more about the other assets you've got, Italy and Argentina. How important are they going to be for the company going forward?
They have been tremendous importance, because without the presentation that permitted the ownership and the operatorship of this asset, where we have proved to make things better and cheaper than our previous owner, so more revenues in terms of oil and gas and less cost, because we are a low-cost operator. So this asset has been our training camp. Now their dimensions are small, and so they lost their real significance for the investors, but we are very grateful to them for having permitted Zenith to become a candidate for a field of such importance as we got in Azerbaijan.
One final question is about the strength of the balance sheet. As a company that has income from, albeit low production at the moment, what's the balance sheet looking like? You've got this extra £2 million plus that's come on as a result of the listing. You've got debt, presumably?
No, but the debt is long-term debt. We don't have any interest to use precious money coming from the shareholders to pay up debt, except a portion of the money that we raise that will be used for an old loan from China, which we are carrying for the remaining 2/3 for another 2 years. So the majority of the money will be used in the development of Azerbaijan. But as a balance sheet, we have some debts, but all these debts are convertible bonds. And so these bonds will be converted, because we believe that the stock will attract the holders to convert rather than to pay the very low interest that they are at the moment eligible.
And you don't have any plans to require any more money other than that you've raised today on the London Exchange?
Who knows? Who knows? Depends. But the important thing that we look very much to anti-dilution attitude. We are not happy to print shares every morning because, first of all, the board and the historical shareholders have invested a lot of money. They don't want to see this dilution affecting the company. You see, the difference is that having a management that invests heavily in the company, we are aligned to our shareholders. We don't just think egoistically about the development of the company for vanity or salary, but we are looking very much to the fact that the shareholders want to see shares eventually created, but only at much higher prices.
Very briefly, where's the company going to be at the end of this year, 2017?
Mathematically we should be around 700 barrels per day, so that will be, with the oil price possibly reaching $60, a great position to be.
Okay, Andrea, it's a pleasure. Thanks indeed for joining us. Andrea Cattaneo is the Chief Executive of Zenith Energy, which came to the London market today in a private placing.